So this is Mullen Automotive. The bad news is that if you look at the year-to-date numbers, price is down roughly 98%. Want some good news? Let's go to the daily chart. We can see price has formed a triple bottom. More good news is that price has now closed outside of this down channel. More good news is that price has formed a triple bottom, so equal lows, while the relative strength index is making higher lows. All right, going back to bad news. Mullen Automotive faces numerous risks ahead, the biggest being its balance sheet. The most recent results show that the company has total assets worth over $559 million against liabilities of $208 million. Data by Seeking Alpha shows that the company had over $214 million in cash and short-term investments. While $214 million is a lot of money for a company valued at $82 million, it is worth noting that its net loss during the quarter was $308 million. This means that the cash balance could run out soon since the company is not bringing in enough revenue. At the same time, Mullen Automotive is doing something that most companies at its stage always avoided. It recently announced a decision to buy back worth over $25 million. A very bold move. The CEO is trying to send a message to Wall Street, trying to say that the stock market capitalization is undervalued. However, typically, profitable companies like Tesla rarely buy back their shares. Instead, they plow their free cash flow to long-term investments like plants. The challenge is that the company is a cash incinerator that has lost over half of the $12 billion it raised in 2021. It is losing at least $33,000 for every vehicle it sells, and the management believes that it will turn a gross profit in 2024, meaning that a net profit will take a longer period. All this means that Mullen Automotive also faces huge cash outflows when it starts manufacturing. Again, we talked about profitable companies putting their free cash flow into hard assets like plants. The implication for the Mullen Automotive stock is that cash is getting more expensive as interest rates rise. So, again, they're using cash to buy back stock, taking away the opportunity to invest that money into plants to make cars. So they're going to go to the capital markets to raise that money, higher interest rates, further shareholder dilution. Not sure what Mullen Automotive is doing, their strategy. Nevertheless, kind of going back to the good news. Mullen stock has reached a short-term bottom at 40 cents. The upside is about 70 cents. However, how could you invest in a company that's buying back their shares and yet they need capital to expand their operations, to make the cars, to hopefully bring in revenue, which hopefully turns into a profit? I don't get it personally. But again, the technicals say the bottom's in. Upside, it's limited to 70 cents. If price can move higher, if this is truly the bottom, look for a final target at the dollar level. Let me know what you think in the comments. Has Mullen reached the bottom, or are we going to see another leg down? Thanks for watching. Subscribe. Please like the video.